Alright, so today we're going to go ahead and learn how to set up the indicators on our chart necessary for utilizing the S-squared trading strategy. So this is the Hugo's Way trading terminal. We're going to go to Insert, Indicators, and then we're going to come to Trend and click on Moving Average. We're going to enter 50 in our period, and we're going to select blue. And I like to make these lines a little bit thicker. No shift, MA method is simple, apply to close. So again, that's period 50, blue, and I like to make the line a little thicker. You don't have to, but I do. Then we're going to do that again. We're going to come to Insert Indicator, Trend, Moving Average. Now we're going to do period 100. And we're going to change this to orange. Now you can go with different colors if you wish for this, but these are the three colors that I use, so all of my chart screenshots will appear like this. We add one more with a period of 200, and we're going to change the color to pink. Where is it? There we go. Alright, so now that we have our moving averages set up, that is how we set up our chart. Now we're going to discuss how to properly draw a trend line. I know that there have been some confusion on this, so we're just going to go ahead and go over the basics. In order to draw a trend line, you need 2 peaks and 2 lows as a minimum. We have our drawing tools right here in this toolbar that allow us to draw a trend line. You're going to click on that. You're going to select the top of your peak, and then you're going to connect the trend line to the next peak. That is your resistance line. If you want to get a little more intraday, you can then draw a trend line to the next connecting peaks. And this kind of gives you a little range zone right here. But ultimately, this represents your resistance. For your support, you're going to take your lows and connect them together, like so. So in order to draw a trend line properly, you need 2 peaks and at least 2 lows. We can flip over to the Bitcoin chart and draw a trend line here as well. Let's zoom out a little bit. We're going to switch to the daily. It'll be a little easier to see. So we have our peak, and we're going to connect it with the next highest peak, right there. You can do the same thing for the lows. So in this case, you can see we have our lowest low, another low right here, and we have this one. So because this is part of the uptrend, we're not going to connect that. We're going to connect our downtrend here. So for drawing your trend lines, if you're drawing support levels, which is horizontal, you would go based off of where a bunch of them come together. If you're drawing resistance, you would look for key levels where a lot of resistance seems to appear. Oh, that is not a horizontal one. There we go. Horizontal. So we can see that this area is a resistance level, right? Because we have 2 that essentially face resistance and go back down. But for trend lines, that's what you do. You connect your peaks together once you have at least two. And then for support lines, you connect your bottoms together when you have at least two. And if you stretch them out, you can sometimes see interesting things like this, where this trend line essentially was in effect since up here. You see how that works? You connect your two bottoms and stretch it out, and it actually matches up with the peak over here. And you'll actually run into things like that more often than you might think. So let's clear up our lines here. You can go to indicators list, and there you can see your moving average or your moving averages that you added. And you can go to your objects list, which contains all of your trend lines. And you can delete, 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 delete. And now your chart is clean again. If you're looking to track intraday, so this is the M30 chart, this will have your shorter term movements. Let's go towards the end here, and let's draw a trend line on the intraday. This is often what most traders are looking at anyways. So we see here we have our two most recent peaks. And let's take a look at our lows here. So if our peak is based off of here, we would need our low, and it appears to be forming a broadening descending wedge, but that's for the pattern section. And now you should know how to draw a trend line. Connect your peaks, grab the next low after your peak, and connect it to the lows. Now we're going to go over how to place orders. Let's go ahead and clear up our chart. So to place an order with the Hugo's Way Forex trading terminal, you have a couple of different options. You can either click on the new order button right here, or you can right click on the chart at a location where you're wanting to place your order. If you have one-click trading enabled, you can also do your trading right through here. To enable one-click trading, you would right-click on your chart or hit Alt+T and select a one-click trading. So let's say, and just for transparency's sake, we are using a demo account for this, as I do not want to be placing example trades on my actual account. So let's say we look at Bitcoin right here and see that it has been rejected by a moving average. We could choose to go ahead and enter a sell. With one click, it has now entered our sell order in place. And we can see that right here in the order tab. If you wish to place a sell limit order, let's say it winds up breaking through these and you want to enter a sell up here. You can right click on your chart at the location you wish to enter the sell, and you can enter a sell limit order. Now this will automatically, if the price of Bitcoin moves up to this point, it will automatically open a sell order for you. That is a sell limit. A sell stop order is an order where if it comes down to a certain price and continues dropping, it would then enter a sell. So limit is if it is coming up to it. Sell stop if it is if it is coming down to it. And the inverse is true for buy orders as well. So let's say we decide we do not want this limit order here anymore. You can either click the X to the right of your limit order, or you can right click it, hit modify or delete. And at this point, it brings up this window where you can see where the current order is set. Let's say you wanted to round this off you could enter in a different price and see how it moved our sell limit up. So you can modify your limit orders before you get there. If you wanted to enter a stop loss to prevent any additional losses, you could do that here as well. And this is where you see a stop loss. A stop loss is if your trade winds up going to that certain point and you are in the red, it will automatically close your order. Now, with Hugo's Way, you can simply drag and move your stop loss around wherever you would like. But to cancel your order, you would click Modify or Delete and hit Delete. And now that is gone. Let's look at placing a buy order. Let's close this one out. So to place a buy order, let's get up close and personal to our chart here. Let's say we believe that it's going to break through our moving average here. We could choose to place a buy limit order for right on the other side of that. So let's see what that price is. Right on the other side of that, let's say 19,145. So you would go to New Order, and this is your new order screen. Market execution means it will happen right now at whatever price is the bid or ask is currently at. If you change that to pending order, you can now enter your buy limit. Now, a buy limit as if it comes down to that price. So we're going to enter a buy stop. So 19,150 or 19,145. Oop, hold on. Place. All right. Yeah, so because it's above the price, it's a limit order. If it was below the price, it would be a stop. So we have our buy limit in place, and if it hits this price, it'll enter into our trade. And then we can decide that once we're in the trade, we can set a stop loss. So let's say it enters our trade at 19,145. We can set a stop loss for 19,100. Then, once it activates our trade, if it comes back down to this level, it would automatically close our order for a loss. Now, if you have a trade that is already in profit, you can actually place your stop loss just above your trade. So let's say that our trade is right here and the price of Bitcoin is up here. We can move our stop loss to be right above our trade. That way, even if it decides to turn around and come back down, we will be protected. And that is how you enter your orders on Hugo's Way. Again, just to recap, market execution, we'll do it right now. If you switch it to pending orders, you can choose your buy limit, sell limit, buy stop, and sell stop. Easy way to remember it is limit means you're trying to place it above the current price. Stop means you're trying to place the order below the current price. And then you would enter in the price and hit place. Now, let's clear our chart. And then we're going to go over how to calculate up. Well, let me clear this chart. One of the questions I get a lot is, how do I know what lot size to use when I'm using Forex style leverage trading? That is an excellent question. So one of the ways that we calculate this is you take your account balance and you divide it by pips. So a pip is the smallest amount the price can move. So in gold's case, that would be 0.01, 1 penny. So let's say, as an example, you have a $2,000 account. If you wanted to figure out what your safest lot size would be for gold, there's a couple of different things to factor in. So gold is a relatively stable commodity. It's not, it doesn't involve a lot of wild volatility like things like Bitcoin. So gold will not typically move more than $100 over the course of a week. You know, here this was a pretty volatile moment for gold, where we saw it was at around 269 and came all the way down to 1893. Then you have time here where it went from 1997 down to about 1786. So we look at that and we say, okay, the longest point that we see gold really moving in recent history is essentially about $200 in price point. So if we want to be safe, we have our calculator and we can calculate this out. Let's say, okay, I want to make sure that if gold moves up to $500, my account will not get margin called. So then we need to add the pips, the cents after that. We have 50,000. That is a $500 price movement comprised of a total of 50,000 pips, i.e. pennies. And we can divide that by, we can divide our account size by that 50,000, which brings us to 0.04. So we know that if we have a $2,000 account, if at any point it moves more than 500,000, it would knock out our trade and margin call our account. Sorry, 50,000. And that's equivalent to a $500 movement. Now, at no point in its history has gold dropped that much, right? So that is safe. That is a very safe lot size for your account, and that is essentially what I use for calculating up my lot sizes. So what is a lot size? When you go to place your order, you see where it says volume, you would put 0.04. That is your lot size. And what I like to equate that to leverage. So that is equal to 4x leverage. Every pip or penny, in gold's case, that it moves up or down, you will either gain or lose 4 cents because it's 0.04. Now, see on if you chose to do a 0.01, that is a no leverage trade. That is at spot price. Obviously, the gold market is closed right now, so we can't really place any example trades on gold, but we can utilize Bitcoin for that. Now, Bitcoin, calculating up a safe lot size is not really doable unless you have a fairly large account, because cryptocurrencies such as Bitcoin, Ethereum, they are prone to very wild swings. If you take this swing right here with its low at 18,701 and its high up here at 20,880, that is a lot of pips. Something in the neighborhood of like over 30,000 pips. or sorry, 300,000 pips. So that's not really something you're going to be able to calculate a safe lot size for. I generally do not recommend that people trade cryptocurrencies unless they have a decent amount in their account. Utilizing something more stable like gold is always much better if you have a small account. So yeah, that is how you calculate a proper lot size for your account. You take your account size and you divide it by the total amount of pips you want to leave as breathing room. So if you want to leave, $50 breathing room on gold because you're doing intraday trading and gold typically does not swing $50 in a single day, you would divide it by 5,000, right? So you would take your account size and divide it by 5,000, and that gives you $50 worth of breathing room before your account would be margined. Obviously, the more breathing room you have, the safer your trade will be. If you have a decent enough account, just as an example, and we'll bring up an example right here. If you have say you have a $10,000 account, right? And you want to give yourself $1,000 of gold's price movement as breathing room, you could use a 0.10 lot size and be perfectly safe, because at no point in time in its history has gold ever dropped $1,000 before at least attempting to recover or reach its all-time high. So it's almost like a little bit of a you can't lose kind of situation if you have a sufficiently safe lot size. All right, so we're going to briefly touch on calculating out some basic patterns so that you can see them and learn to kind of trade them. So we're going to take a look at one right here that's forming on gold. And it's one I've been watching for the last couple of weeks to see what it does. But let us draw a trend line here. If you're at all familiar with patterns, you will recognize this as an upside down or inverted cup and handle. So cup and handles, the way they work, if they are inverted, you'll have this upside down cup, and then you'll have a handle that will typically be about anywhere from 20 to like 50 or 60% the depth of the cup. And what I mean by that is height, right? So your cup is pretty tall, and then your handle is a percentage of that. So let's go ahead and measure this out. So we're going to take the height of our cup. Now, normally you would include all the candles, but these ones right here, these two really tall ones that seem to be kind of out of the blue, that was due to a news event that occurred on the 8th. So we're going to kind of ignore that. So let's grab the mean of our cup. Oop. So let's go ahead and measure that. So you're going to measure from the approximate depth of your cup, 1982, and then you're going to say, oh, look at that. That makes math pretty easy. 1782. So that's a $200 depth. Then what you're going to do is you're going to subtract that from when it breaks down and underneath this. So let me see if I can move the chart a little bit so we have a little more room. There we go. So if this is 200 pips tall, the depth of the cup, you would take the break point and subtract 200 from that to receive your target. So break point for the cup would be 1790. So we're going to subtract 200 from that. And that comes to 1590. Now, personally, with the shape of the current economic market, I find it a little dubious that gold would drop that far, but we're using this as an example for calculating out patterns. So you have your height, you subtract that from the breakpoint, and then that would be where you would start looking at taking your profit. So to trade this, you could set a sell stop for right underneath that price. Now it won't let us actually place the order right now because of the fact that the market is closed. So we could just type this in as an example. So you would go to your order, change it to pending order, sell stop, and then you would enter a price that is underneath the breakpoint. And then you could either add, after the trade is logged, you could either add your take profit or you can add it at the time of placing the trade. So that is how you calculate up a cup and handle. Let's go to an example in history. One of the cup and handles that I traded way back when, so you can see what it looks like when they play out. So this is a cup and handle that I was watching back in 2018. You have this very beautifully defined cup with its handle. Now the one we just looked at was an inverted cup and handle, so it went like this. This is a proper cup and handle, not inverted. So for this, you measure, okay, here's your depth, 1177. Here's your height, 1355. So we'll grab our handy dandy calculator, 1355 minus 1177. That gives us a $178 increase. So we would take our price point here, our breakout point, which was at 1337, and then we would add $178 to that. So if we have our 1377 plus 178, that gives us a take profit of 1,555. So we take our horizontal line, 1,555. And as you can see, it reached that. It then proceeded to continue going past that, but that is how you calculate out a cup and handle. Now we do have another pattern video on the YouTube where we go a bit more in depth on other patterns, but the cup and handle pattern is very, very common, and you'll see a lot in the charts. And it often, and you calculate it out the exact same way you calculate out a head and shoulders. So a head and shoulders essentially is like a cup and handle, but it has a handle on both sides. Let's see if we can real quick grab one from a chart just so you can see that. Oh, I'm on the M30 here. Let's zoom out a little bit. Alright. There was a head and shoulders on the Bitcoin chart up near its peak that I wanted to take a look at. It's around here somewhere. This is a small example of a head and shoulders, so we'll grab this one right here. So you have a shoulder on one side. So you got your trend line start, shoulder peak, comes back down. Then you have your head peak, comes back down. Then you have your second shoulder. And that, if it breaks beneath that, generally indicates a downward movement. So you would measure from the neckline of the head and shoulders up to the mean average of the height, subtract that, and you'd get your take profit. So that's how you calculate out head and shoulders. But yeah, I recommend if you want to know more about patterns, you check out the patterns video. So let's see here. I'm going to take a moment and see. Nope, no questions. Perfect. So we're going to go over a little bit about how to utilize these trend lines that we added to our chart at the beginning of the videos. So these will act as moving and dynamic support and resistance levels. Your weakest one will be the MA50, which is your blue. Your medium strength one will be the MA100, which is the orange. And your strong one will be your moving average 200, which is the pink. Now, what does this mean and how can we use it to trade? So similar to regular support and resistance levels, or your trend lines that you can draw, these allow you to visualize the movement of support and resistance. And what I mean by that is when the candles get close to them, they'll struggle to break through because it's a resistance level if they're beneath it. If the candles are above, it'll treat it like support. You can see right here, Bitcoin came down, treated it like support, continued going up. Then once it's beneath the candles, it's a resistance point. Beautiful example of that right here, where Bitcoin was trapped between the MA50 and the MA100, and it just got stuck, ranging back and forth between them until eventually it fell down. Now each time Bitcoin tries to recover, you can see it tries to break through the MA50 but fails, tries and fails, tries again, fails, tries again, finally gets through, breaks above the MA100, where the MA100 gives it support. But then it tries to go after the MA200, and the MA200 is much stronger, so it smacks it back down. And now it needs to begin the struggle of getting back above the other moving averages again. So in a sense, what I do when I'm trading off these moving averages is I wait. If the candles are getting too far away from the MA50, they will come back down to touch it. So you see here, Bitcoin's on its bull run, bull run, bull run, too far away from the MA50, comes back down to touch it. Bull run, bull run, bull run, too far away, comes back down, doesn't quite touch it, so it continues its bull run, comes back down, and then touches it. It will like to test them in sequence. What I mean by that is it will test blue. If it holds, it'll test it again. If it holds, it'll test it again. If it fails, it'll go to test the next one. Came back up, tried to break through the MA50 because now it was resistance instead of support since it was above the candles. It failed. Well, since it had already tested MA100, it just broke right on down through it. Then it works its way back up, faces some resistance in this area from MA100, goes back up, gets a little bit of support here from the MA200 since it was above it, comes back down, gets support here from MA100. Now let's take a look at what this means in the current bear market, because I know everyone's watching the bear market and they're not too happy about it. It's great money making opportunities if you know what to look for. So we see here's our moving average. The candles are currently beneath all of them. Every time it starts to get too far away from the MA50, it will either go sideways or up until it gets close to it again. I like to think of them as gravity. So your weakest gravity is blue, middle gravity is orange, strongest gravity is pink. So anytime it's getting too far away, it'll come back up or it will go sideways to test it. So you can see we've begun a sideways right here, which means we will likely go sideways, maybe trend upwards a little bit until we get close to that moving average again, which we can see is coming down right around here. So we can expect that Bitcoin will kind of range in this area probably until if it starts to trend upwards a bit, then we could see it around the 14th where it comes into contact with the MA50. If it just ranges sideways, it will likely not be until near the end of the month, the 28th, before it begins to break above that or get rejected by it again. Could go either way, and we won't know until we get there. But that is why you see some individuals saying that, we believe that near the end of the month is when we'll start to see some movement from Bitcoin, because it needs to range either sideways or slightly up to meet that MA50 again, because it's gotten too far away from it. Now, if it ranges sideways, the MA50 comes down, and then Bitcoin successfully stays above it, then it will likely go to test the MA100 and whatever price it is at that time. So we can always evaluate that, right? We see that right here. So when Bitcoin was coming down off this last one, once it was beneath the MA50, whenever it would get too far away, it would come back up to try to test it, and then consolidate a little bit beneath it. But you can see whenever it got above the MA50 with any form of significance, it would go to test the MA100, then the MA200. So it tests in sequence. Here's a good example on this bear fall right here, similar to what we're dealing with right now. It fell down pretty sharp, ranged sideways, finally got above it. Once it got above it, then it went to MA100, then MA200. So it is entirely possible that we may see a repeat of this right here, where it ranges sideways, finally gets above the MA50, goes to test the MA100, then tests the MA200. Whether or not it continues moving up from there will entirely be determined on whether or not these moving averages that were once resistance, now support, hold. You see the MA100 held like a champ right here and allowed it to reach its next high. So as a little synopsis, and there is an actual video on my YouTube regarding the S-squared trading strategy and how to combine patterns with your moving averages here to help you trade more accurately. So I'm not going to go too in-depth on a lot of these topics, since this is a beginners just kind of familiarizing you with how everything is working and the various terms, how to open and close trades, how to set your stop losses. Let's say, and let me just touch on this briefly while I'm thinking about it, but let's say you entered a buy after you saw it have that successful break above the MA50. Let's say here's your buy when you got confirmation that you had that break. For you, what you would want to do is you would want to set your stop loss beneath that moving average, because that moving average is now support. And then once it broke above the MA 100 and you got confirmation there, you could move. Come here. You could move your stop loss up. Because see, once it was above the MA 100, your trade is still down here, but now you know the MA 100 is acting as support, so you can move it up beneath the MA 100. Then when it finally broke above the MA 200, you could move it up again. And then when it came back down, it would have closed your trade out for profit, and you would have caught all that movement. So don't be too aggressive with your stop losses. You want to give your trade room to breathe. I will only move a stop loss up once it's crossed the next level of support. So if my trade is here at this first line, I'd wait until it crossed over the MA 100 and I'd move my stop loss up. The only exception to this is if you are in some profit and you're not 100% sure on what the market's doing, you can move your stop loss just above your trade. And then that protects you from any potential downside. Because once it's in profit, worst case scenario, if it came down and touched your trade, it would close you out and you wouldn't actually lose anything. So I highly recommend that people use stop losses effectively. And the best way to do that is by using it to protect yourself when you are in profit, and then moving it up, but keeping it underneath the level of support. So if we were going to enter in a short trade, right? I'll use this one as an example because we can see that it was rejected. So you would do this essentially once the candles got close to the MA50. So let me show you what you would do. So let's say it's coming close. You see some bearish candles. Okay, it's been rejected. You can go ahead and enter in a short, right? So you would probably have gotten your confirmation when you saw it start downturning away from the MA50. So you could enter in your short right there. And initially, you would have your stop loss. Let's say you entered in on this candle, so you'd put your stop loss right up above the MA50. Then as it continued dropping down, since there's no, with the short here, since there's no trend lines for it to get close to or to get above, for you to essentially place, and by trend lines I mean the moving averages, sorry. Since there's no moving average beneath that for you to place your stop loss once it gets past it, what I would do with this is I would essentially use a trailing stop loss, where every couple of candles where it's going the direction you want it to, you would just move it down about 50% of that candle. Now this is on the daily chart, so this is over the course of several days here. So like let's say when this candle closes, move your stop loss down about halfway. When this one closes, move your stop loss down about halfway. And then you would have wound up on the following day, you would have moved it down right about there, and then your trade would have closed with the day after that when it came back up to touch your stop loss. But still, that's some good movement right there. That's from 29,599 down to 21,918. That's a lot of pips. That is over 80, well, not quite over, it's almost 80,000 pips. That's huge. Even if you were trading with a 0.01, the no leverage trade, that's an $800 trade for you. Yeah. So in a nutshell, that is how you can use the moving averages by themselves to do some trading. The accuracy of it is improved when you include patterns. So I highly recommend that you include your patterns, that you familiarize yourself with them, and that you learn how to trade with the patterns. Like this is a rising wedge right here, just as an example. When you connect your peaks and you connect your lows, you've got a rising wedge, and rising wedge indicates that once it breaks beneath it, it's going to go down at least the mouth. The mouth of it is the peak to the low, right, that you can see right here. So it would go down at least that far. So when you combine that, here's your pattern, but look, what also happens? It also breaks beneath your MA50 at this point. So when you combine these two methods of trading off the moving averages and trading off your patterns, effectively, it will increase the profitability of your trades, because you can use the patterns to calculate how far your trade may go, and then you can use the moving averages to give you a general idea of dynamic support and resistances, where you might see a turnaround occur, because simple calculations are not always going to get you exactly to the right point, right? Whereas, because there may be other factors you're not aware of at the time. Like if you remove these moving averages, the chart looks a whole lot different, and I'm going to show you that. A lot of people will look at a chart like this and be like, well, why is it moving that way? Why is it doing that? Why did it suddenly, like stop right here? Why does it range sideways and then drop more? And with these indicators of those moving average lines, you're able to see that. Like since we just had our moving average, we know that the MA50 was coming up like this, and then it started curving and then went down. And I'm just going to add just that one back here again so you can see it. That is not blue. There we go. So we go from not understanding necessarily why it keeps coming down and testing, because this is not a straight line. You can't draw a straight line connecting your lows together. This is a curve. And the MA50 allows you to see that curve. It allows you to see that moving dynamic support and resistance area. I'm going to check and see if we have any questions. Is BTC forming an inverted cup and handle on the 4-hour chart? Well, let's take a look at it. So 4-hour, let's go to the end here. Let's make it so we can see this a little bit better. Oh, you said inverted. I'm guessing you're probably meaning this little bit here at the end. I mean, I don't see it. I would say if you connect your highs because you got peak, peak, peak here. You got low, low, low there. It's more of a pennant at this point, and it's technically a bearish pennant because bearish pennant, it has its flagpole, which you can see here is the candles coming down, and then that. So I would almost be more inclined to believe that at this current point, let's measure this out. Okay, if we're gonna let's put a little predictive action in play and see what happens. So for your flagpole, you measure where it starts, which is right here at 30,135. Let's pull up our trusty calculator. 30,135. The flagpole is down here at 17. So subtract 17,580. That gives us a target there of 12,555. So let's zoom out a little bit. I can't. Oh, there we go. So that would essentially, if that is indeed a flagpole that winds up coming to fruition, so subtract 12,000 from the breakout point of 18, that would pattern-wise target around there. Now, is that a possibility? I think a lot of things would need to go very, very wrong for that to be a possibility, because a lot of institutional money is in Bitcoin at this point, which is why you can't just use patterns. You want to combine it with other methods of trading. Is it potential? If USDT pops, then I mean, yeah, that could be a potential. So that's something to, I suppose, be aware of. But I'm personally thinking that that is not a horizontal trend line. I'm looking at this. Let me set the chart back up real quick for you with all of our proper items. Indicator. Yeah, insert indicator. Trend, moving average, 100, orange, because this is what I've been watching. I've been watching the fact that we are now beneath the MA50 on the monthly chart. Now, if you look out through history, it's been a long time since Bitcoin has been beneath the MA50 on the monthly chart. This is a price point of around 11.8 thousand. Personally, worst case scenario, I believe that would be Bitcoin's new all-time low, 11.8K. Because as we know, it tests the moving averages in order. We had a test right here of the MA50 on the monthly. We had a test right here of the MA50 on monthly. Then we had a failure point, which means, according to the historical patterning of how it tests, we need to test the MA100. Let me show you a little bit about what I mean with that. So, Bitcoin throughout history, can I go way back in time? Yes, I can. All right, cool. So, I'm going to zoom out a little bit. Perfect. Alright, so historically, and we're going to use the daily chart as an example of this, Bitcoin tests, fails. So then it tests the MA100. Let's move a little bit further into the future. It tests, fails, goes to the MA100. Let's go a little further into the future. Tests, fails, goes to the MA100. Tests, fails, goes to the MA100. Then let's look at this run. When Bitcoin first got to its all-time high of 47,000. Test, fail, goes to the MA100. Tests, fails, goes to the MA100. Are you beginning to see a pattern? Tests several times, fails, goes to the MA100. I haven't added the MA200 back again, but guess what? That's where it hit right here. It bounced off the MA200. That was our bear market, right? Where it went to test the MA200. From there, it just kind of went sideways, then enters a bit of a recovery period. Kind of gets close. Tests, fails, MA100. Moving further into the future, the next bull run, the one that we are all currently remembering as the good times. Test, MA50. Test, MA50. Fails, MA100. Let's go to the next one. Tests, fails, MA100. Test, fails, MA100. You see how it's doing less successful tests off the MA50? As a result, MA50 wasn't really a strong point anymore, so it's failed. Now if we look at the monthly, I mean, you can even see it on the weekly too, by the way. Test, fails, MA100. It's this same pattern that Bitcoin has been doing for almost ever. Here's a test, fails, MA100. Now we look at the monthly. Test, fails, MA100. So that's kind of my personal thoughts on it, and that's why I'm waiting to really enter the market until I see what happens. I need to see a candle either successfully close and then the following candle close above the MA50, which is currently chilling at 21,455. At that point, I'll believe that MA50 has held, because sometimes it does dip beneath it, but then it closes back above it again. We need to close back above this, otherwise I will believe and warn other individuals that a test of MA100 is inbound. You are most welcome. You are most welcome. But alright, so this video is going to be chopped up into some sections and then uploaded to YouTube, talking about certain specific things. We'll likely not include the last part about the Bitcoin analysis, but I might under a separate video, not in the playlist. So the purpose of these classes moving forward is we are going to essentially be going over how to go from beginners, all the different things you need to learn to start becoming a winner with trading. And it's going to be a process. It's going to take some time. But these videos are a point for you to refer back to. But I highly recommend that you also check out the more in-depth videos in the videos training, where we go over Patterns 101, and the Strategy Trading 101. These will give you a more in-depth look at patterns and then the S-squared trading strategy. So thank you guys for coming out. Appreciate you being here. And I will see you guys next month when we move forward with the next set of the classes. Thank you and have a great day.